If you are looking to buy or sell an assignment of contract condo, or if you're involved in a transaction of a recently constructed new home, you will be shocked to find out that GST and in some provinces, HST might be, or more correctly, is likely payable a second time. Yep, it's true. It's very common that you will see newly constructed listings advertising no GST. GST has already been paid, and that is likely not the case if you purchase that unit. This practice of flipping homes without paying GST the second time is extremely common. In fact, it's so common that most agents I come across don't even know to advise their clients of the tax implications of flipping a newly constructed property before or after the property registers for the first time. Now, if you're a buyer in a transaction, for sure this is concerning, but if you are selling that property that you just completed on and already paid the GST, and you don't think you have to collect a second round of GST when you sell, you'll be shocked to find out that the CRA is probably going to come knocking for their complete 5% of the purchase price. So if you found this channel because you're trying to flip a pre-sale condo, or if you're looking to purchase a newly constructed unit that is already registered to one owner here in my market of Surrey and the Fraser Valley, make sure to subscribe to the channel and click the like button so I can get on with the video. And if this situation does apply to you and you're looking to hire a team of real estate professionals to guide you through your newly constructed property transaction, yeah, real professional in your gym, you can book a call with me right now using the link in the description below at a time that works best for you. Now, I'm not a tax professional. I can't advise on taxes really at all. But recently on the Tom Story Show, my weekly Canadian real estate podcast, available on YouTube, Spotify, and other audio apps, Tom and I spoke with CPA Jimmy Lee Tang of Achieve CPAs. And near the end of the conversation, we got into the topic of GST and the common misunderstanding that GST is not applicable to the second sale of a newly constructed property. And while in many cases that dreaded tax is found to apply, and both buyers and sellers in the market of those new properties are being advised otherwise by their agents. So rather than explain this further, here is a clip from last week's podcast. I'll link the entire episode to the end of this podcast in case you want to check it out so you can learn more about real estate taxes and how they may affect you. And if you enjoy this clip, please consider subscribing to the Tom Story Show for new episodes every Sunday morning. Here's the one I want clarity on, because I think most agents don't understand this, and definitely condo flippers of pre-sales don't understand this. GST applicable on the second time the property sells. Most people think, oh no, I completed on that. I completed from the developer myself. I paid the GST. GST is paid. Come and buy my condo. GST is included in the price. Don't go buy that one down the street where GST is still on top. Clarify for me. What's going on, Jimmy?
Oh, Steve, it's such a big issue, and I run seminars on this all the time with real estate brokerages and talking about GST issues on various different types of transactions. But when it comes to pre-sales, right, historically there was a bit of a discretion as to whether or not GST would apply on an assignment of a pre-sale agreement. So that discretion is now gone. The federal government has said that for all assignments of pre-sale contracts, GST applies. GST applies on the lift, not on the refund or deposits. Okay. So I know that's not exactly the example that you're talking about. So I'm going to circle back to your example now, where somebody has a pre-sale agreement. They don't assign it. They close on that purchase and they get the keys. They obviously pay the GST to the developer because it's new residential property, and they don't occupy it. So they're not living in it in themselves. They're not renting it out to somebody else. Maybe it was somebody who is in it from an investment perspective. Maybe they wanted to assign it, but for one reason or another couldn't assign it before completion. So now they've got their keys. They turn around and relist it for sale. The question then becomes, is GST applicable on that subsequent sale price? And the answer is unequivocally, without a doubt, yes, it does. It always has, and people just don't know it. And then that's where they get into trouble, because it is the seller's responsibility to collect and remit GST to the CRA. it is also the seller's responsibility to notify the buyer that GST is applicable on the transaction. And a lot of times what we find out is that nobody says anything about GST. The buyer assumes it's used residential property. They're not paying GST. And at the 11th hour, either the seller is trying to collect an additional 5% on top of the purchase price, which the buyer says, heck, no way, I don't have another 5%. Or the seller is just going to be like, oh, you know what? Like, I really need this to close. I'm just going to swallow the bullet on that 5% and say the GST is in there. But now they're cutting a check to the CRA for that 5%. So let's now circle back to the mechanics of all that, okay? So GST, we know, is paid to the developer at the time of the original purchase. The buyer then becomes the next seller. And because they are flipping this property, right? The property is not occupied either by themselves or occupied by a tenant. It is, in effect, new residential property, okay? So we have to understand that new residential property has always been subject to GST. It's just that not all people realize that it's still new residential property. The biggest myth is that once that property is bought and registered by the first owner, bought from the developer, registered on the land titles office, that first registration makes the property used residential property. That is not the case, right? That does not make the property used residential property. A property is used residential property when somebody occupies it as their primary place of residence, rents it out to somebody else who occupies it as a primary place of residence. That makes it a used residential property and therefore becomes GST exempt on a subsequent sale. But in the example we're talking about, somebody is simply just flipping that property after taking the keys. So it is subject to GST on that subsequent sale. GST is applicable on the full sale price of that subsequent sale. It is the seller's responsibility to notify the buyer that GST is applicable on that full sale price. And if they're selling the property for $1 million, the seller needs to collect $1,050,000, being, the GST on top. And then that $50,000 goes to the CRA. Now, a lot of people think, well, that's double taxation, isn't it? Because the seller, the first buyer who then becomes a seller, paid GST first to the developer and then collects GST again from the next buyer. It's not double GST because what many people don't know is that the seller has the ability to get a GST number because they're running a business now, right? Mm-hmm. Flipping a property is running a business, even if it's only a one transaction business. They could register for a GST number. And when they register for that GST number and they file their GST return, they can claim a refund, a credit, if you would, on the GST that was originally paid to the developer. And then they would offset that against the GST that they collected from the next buyer and only remit the difference to the CRA. So let's put some numbers to this. Let's say, for example, the pre-sale contract is an $800,000 purchase price. So GST on top would be $40,000. So when the time comes for the first buyer to purchase from the developer, it's $840,000, $40,000 of which, of course, is the GST that they paid. And if they're selling to the next buyer for $1 million, they're going to collect $50,000 of GST from the next buyer. Well, when the first buyer, who now is our second, or who now is our seller, files their GST return, they're going to report $50,000 of GST collected from that next buyer, minus the $40,000 of GST that they paid to the developer, and there's a net difference of $10,000. You would send that net difference to the CRA. So you can see that the CRA is only getting GST on the stepped up value of the property. So that's how
you need a GST number to do that, right? Like are you going to go file for a GST number after when you realize, oh crap, or do you have to do it originally?
So if you want to make life easy on yourself, you get a GST number prior to the closing date of the subsequent sale. That's making life easy for yourself. If you didn't get the right advice, maybe you're working with the wrong realtor, they didn't tell you that there's an issue here, go talk to your accountant kind of thing, then you didn't know, right? So then now the closing date for the subsequent sale is gone and done. So you can still get that money back that you claimed that you paid on the GST to the developer, but now you have to go do it in a runaround way where you have to first send the $50,000 to the CRA. So there's a cash outflow of $50,000. And then on a separate application, you have to apply for a refund of the other $40,000. So there's a difference in cash flow timing there between doing it the easy way versus,
Mhm.
going about it the hard way. Right. The end result is
Awesome.
still the same.
Yeah,
Right.
yeah, yeah. No, I love that. That's fantastic. Like this is see, Tom,
Yeah.
this is the type of amazing information you can get from listening to the Tom Story Show.